Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. Happy Friday morning, fun Friday, casual Friday, and I heard maybe foolishness Friday. Preview for some of the stuff that Mike is going to talk about. But we've got three topics for you today. Anybody that holds Nvidia probably already knows that today is the split day. It technically happened last night. So when you check your account this morning, you'll see 10 times the shares at a tenth the price. That can spook people because sometimes that can show a big loss or gain as the custodian catches up with all of that. So that'll be our topic one. And how do stocks act after they split? Might surprise you. And then I'm going to transition to Mike, who's going to talk about the jobs number we got this morning. Good news, bad news, bad news, bad. I don't know. It's tough because now we got some great jobs number that hit the market that was in the green earlier, went red. Mike will peel that back for us. And then last, if you might have heard, I don't know, this company called Gamestop in the news. Yeah, it's back. Literally go to, the best use of your time is to go to Netflix and watch the special, which is actually like in the top 10 right now because people are coming back to it. But Mike's going to talk about the latest in GameStop and what's going on there. And of course, talk a little bit about that Roaring Kitty live stream later today, which probably just means the insanity level is going to go through the roof. But that's what we're going to talk about today. It's a financial education presentation, so you have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. Let's take a look at the stock split. Okay. Nvidia is up above $1,200, or at least it was the last time I looked. May have taken a little hit this morning, but a 10-for-1 split. First of all, what is that? It's like pretend you had a $100 bill in your pocket and you're trading your $100 bill for 10 $10 bills. Okay, so fundamentally it doesn't change anything, but it does change things. So we're going to talk about this article on CNBC from last night, kind of talks to that. So we're going to peel that back a little bit. So do they matter? Well, yes, they do. It reduces the share price. So we'll kind of skip to the bottom here, and then I'll kind of summarize with how stocks act. But there's no fundamental change. You can see that as the first kind of bullet there in bold. So, one share at 1,200 is going to be 10 shares at 120. That'll price in right away this morning. So it doesn't have any effect on any of the business metrics. If you pulled up finviz.com, first of all, I would say you're a bigger nerd than I am if you even know about that website. But yes, that's where you have like 100 ratios to look at. None of those are affected, right? Commission costs, we don't really pay those anymore, so that's not as big a deal. Where it does affect is accessibility and for our models as far as the second one, their position management. So right now, if you started a Roth IRA and you put in $10,000 and said, hey, I want Nvidia, I would have to say, no, you can't afford a share. Now, you can afford a share, and you can also afford some diversification with there as well. So having a lower stock price helps us on the professional side when we go through when our computers recalculate the rebalancing in a portfolio. It gives we can get closer to that actual balance, if you will. And even in our smaller portfolios, we don't even have some of the large stock positions just because of that very reason. And accessibility, so yeah, a little bit psychological, but people like the lower share price number. Makes they feel like they have more, right? Even though we all know that doesn't make a difference there. As far as stock-based compensation, you remember Nvidia did declare a dividend. So that dividend, I think, was 1 penny. Then after they do the 10-for-1 split, now it's going to be 10 cents. Or right, you're going to get more, if you will, because you have the dividend for 10 shares now. But they all priced that in when they announced it, so they knew it was coming there. Options, if you hold options, it's one of the more popular stocks out there. People are betting on it, if you will. Your options will still exist, but they'll have a little identifier next to them or a little asterisk next to them, so you know what the old option is versus the new options that are now available as of today. So just realize if you see something funky going on with your options there, it is priced in. It is showing correctly. If you have any questions, you can give us a call. So how do stocks act though? So this is you can look at some of the previous, some of the previous stock splits that we've had. Tesla was one of them that we had recently. And generally what you see is there's a lot of hype. So there's an earnings release and the announcement of the split, right? And everybody gets excited because who doesn't want more shares? And the stock tends to move up. So that's that buy the rumor, even though it's, it's not buy the rumor, sell the news. It's buy the announcement and sell the actual occurrence of the thing. So what happens is a lot of people who have been wanting to sell Nvidia have held until today to capture the split, and then they can obviously sell off a portion of their shares, right? So there's a lot of selling that goes on right after a stock split just because of that, ability to now trim in a smaller amount. So a lot of stocks have sold off. I think Nvidia is going to sell off after the split. Maybe that, nothing changed with the company. It's still a fantastic company. So maybe it sells off hard enough with the market and with the split that it gives us an entry point that we like. We talked about it yesterday. We'll have to see where it goes from there. But that's enough on Nvidia. Also, don't forget, if you're a Chipotle holder, 50-for-1 split coming up on June 26th. So that's the next split. All right, Mike, that's enough on splits. Let's talk about the jobs number this morning. Over to you.
Yeah, jobs number, exciting coming out. But I do want to say one thing on the psychology of splits. If you have $100 bill in your pocket versus 10 tens, and you decide you want to get a soda from your local convenience store, I always felt like it's kind of weird to walk in and buy a soda for $1 and give them $100 bill. But if I got a $10 bill, so there is a psychology to it. Even though I get it, the money side, mathematically it's exactly the same. So maybe we'll see that with Nvidia. But I'm going to call this Foolishness Friday because I got two things that I'm going to report that just seem kind of crazy today. So after Wednesday, we had bad news that was good news for the market. Bad news, less jobs created, therefore the market goes up. Today's the flip-flop. It's good news, bad news. But the good news is more jobs were created than they expected. They had expected 190,000. They created 272,000. You can see the graph of jobs creation up into this point. Really May doesn't look that out of whack with as far as rest of the graph. But since that was more than expected, the market reacts negatively because the market wants rate cuts. That's what the market's sitting on. And when news comes out like this, there's less chance of rate cut. So more jobs are created, the unemployment rate goes up. It went up to 4%. Another factor, and you're going to see in a moment, is more people leaving the workforce. So a lot of factors happening in here, but why is there a difference? And I'm going to get into that in just a sec. I did want to point this out that it shows the labor force participation rate decreased to 62.5%. So that means less people working. So, a lot of factors playing in here, but I think what's really important to look at too is where are the jobs created? If you're looking for a job, if you're in that situation, where are these things happening at? So the top three, leisure and hospitality, or first healthcare. Guess what? We got an aging population, more jobs in healthcare. That doesn't surprise me. Second, government. I don't know, going into election year, like 43,000 more government jobs created. I don't know if you consider that a good thing. And then last, leisure and hospitality. And of course, I'm thinking summer and, Kings Island here and Six Flags and all these parks, hotels. Well, of course, there's more jobs created. So two of the three make sense. And I guess the other one, the government, we should just expect it. So that's where the jobs were actually created. Now, since Wednesday was one report and today's a different one, I thought I would show a comparison. I found this graph. It's about 6 months old, but it shows kind of side by side. And the funny thing is that the article even says, sometimes they're very close and sometimes they're not. And you can see this graph and I'm not sure that's very helpful, but why can't they just be the same? If we're surveying to try to get the same kind of information, how many jobs are created, how hard could that be? Well, think about it. It's very hard because you're trying to survey a country that has well over 300 million people, and you're trying to figure out how many jobs were created and who's leaving the workforce, and you can't survey everyone, and everybody's employment history is not on the blockchain. So this information's hard to get. So anyways, we get this variation. So let's take a look at the effect on the market. So you can see red numbers, not terrible red. And I think part of the reason why it's not terrible red is since the unemployment rate hit 4%, went from 3.9, I think, to 4%. 4% is kind of a big number to think about. So I do believe the Fed can look at that 4% and say, yeah, I know that more jobs were created, but our unemployment's up to 4%. So there's that balance. And obviously the Fed's really just trying to keep the inflation under wraps. So it's kind of that battle. We'll see where it goes. I wouldn't be surprised if this is kind of seen more as a mixed news day. So let me get on to the crazy foolishness. So
yes,
let's go to GameStop. So Steve mentioned that today Roaring Kitty's going to have a news feed. And GameStop, I have been in GameStops 5-6 years ago. My kids, we were in there looking at these PlayStation games, and I saw the trend. Like pretty soon we no longer went to GameStop because they could just download everything. So I can't say I've been in GameStop. I can't even remember if the one in Lebanon, Ohio, still open. If it is, I'm going to swing in there today to see what they do in there. I'm going to see. It's probably just a hangout for teens, I'm guessing. Anyways, their earnings came out. Their sales dropped 29% from last year. Steeper than expected. That's not surprising. It's a dying business, right? I mean, you don't need to go into GameStop anymore. You don't need to go into bookstores anymore to buy books. And that's why all the bookstores went out of business, except for a few. So the stock should go away, or it should continue to decrease. But we have what I'm going to call gaming of the system. And if you are in GameStop, if you are playing in this field, you are gambling. You are doing what we learned in college called the bigger fish theory. I'm going to buy this thing, not because I actually think it's worth it. It's because I think there's a bigger fish that's going to buy it from me. So if I buy it for $20 a share, it goes up to 30 and I sell, I made money. That's the field you're playing in. But there's also people betting against you. They're going to bet that it's going down. So you have this kind of live wire that people are playing to see if they can make money on. Throw on top of that, and so this is like going into the casino. But there's another factor here. If you went into the casino and you put $100 down, and they said, "Hey," and you doubled your money, you went to 200, but then the casino came back and said, "Hey, we revalued the chips, and they're really only worth $150." That's also what is happening with GameStop. So the company, when they came out with this earnings and they saw their stock was up, they issued more shares. So they're selling more shares, which will force the price down. So not only are you gambling against another person betting up and down, you got the company drawing out money. Now, do I blame the company for that? Absolutely not. That's probably smart because they know the company's not worth it. So why not get more shares and more money? I do not know what their mission is, where they're going from. If I was the CEO, I'd be coming out and saying, "Hey, we're shifting from games to cryptocurrency or digital ad." Anything. Come up with a plan. But anyways, live stream is today. You do not want to be in this space. I mean, I can't predict whether the stock was up 20% today. Now it's down 20%. Actually, let me click on see what it's down now. Maybe it's only down 15%. This thing is all over the place. Roaring Kitty. Hey, Steve, I didn't know you could become a celebrity doing podcasts like this, right? Maybe Steve and I actually saw the movie together. Maybe they'll make a movie about us doing this morning show. I hope not, but Roaring Kitty, hey, from your basement, you can create all this wealth for yourself. Hey, more power to you. You probably are the only one that understands what's going on here. So with that, Foolishness Friday, you don't want to be in this. And I can't tell you whether it's going up, down, whatever. It is kind of fun to watch. I will admit that. I'm going to try to go visit GameStop today, maybe get a picture. Maybe we'll do a live show from GameStop, and I'll find out what's really going on out there.
What's really going on. Mike reporting live. Leave that up for a second if you would. If you notice, everybody, here's another cautionary tale about hopping into these things is right now GameStop is halted. So remember, stocks, when they hit certain triggers, and this came out of regulation from, I think, the global financial crisis, but certain triggers, up or down, and it's going to pause. And I've covered this in a show. I probably need to do it again. Pauses for like 5 minutes or 7 minutes or 15, depending on the trigger. And if you hit the third trigger, I think you're done for the day. But it can get paused up or down. And really, those are circuit breakers in the market. So why do you care other than gee whiz, that's how it works? Is because if you are in a position to where you're about ready to click the mouse to sell to take your mega millions off the table, just realize sometimes you can't. And when it opens back up, it can open up significantly lower because a bunch of people have been sitting there staring at it for 5 minutes or higher, right? I mean, it could work in your favor either way. But yeah, so it's interesting. We have GameStop in play. Maybe if they switch to GameStop coffee or GameStop car washes, or GameStop AI and just rebrand to whatever that means, or GameStop crypto. Yeah, all of those I think win over video games, right, that you go to the store to pick up. So we'll see. And Roaring Kitty, the best thing I've heard, you can go ahead and bring that down now, Mike. The funniest thing I've heard is, think of the irony of the one guy from his basement or his mom's basement. I don't know. Sorry, Mr. Kitty. I don't want to offend you now since you're worth $300 million. But the one guy that's doing all this from his basement on a podcast could, if the stock hit $69, which is what I saw this morning, actually be a billionaire. Which the irony of the guy, diamond hands, let's take down the billionaires of the world, can end up being a billionaire out of this. It's like, where does that put you? Anyhow, so we shall see. Yeah, we'll probably have to throw that on today and just actually hear like 5 seconds of what he's saying. But it'll probably be addictive, right? You'll probably be dumb enough to where I have to sit there and watch the whole thing. But we shall see. So maybe Monday, Mike will have the straight scoop from live from a GameStop for us to report on. But with that, you guys don't sweat GameStop today. Stay out or watch from the sidelines. And that's what we've got for you today. And we'll see you guys back Monday. You have a good one. Bye.